Good day everyone. We are here to discuss the Chapter 10 Shareholders' Equity Part 1. This topic is related to the standard PAS 32 financial instrument presentation. PAS 32 prescribes the principle for presenting financial instrument as liability or equity and for offsetting financial assets and financial liabilities. So maybe may mga additional info na tayo about financial instruments if it is classified ba as liabilities or equities. And lahat ng mga napag-aralan natin dati sa PAS 32 noong CPAS ay mapapag-aralan uli natin ngayon dito sa shareholders equity. Our learning objectives is first, state the components of shareholders equity. Second, account for the initial issuance of share of stocks. Third, account for the reacquisition and retirement of shares. Last, account for stock rights, convertible preference shares, and donated capital. Accounting for the equity of corporation. First, we have to define the corporation. By the Philippine Corporation Code, corporation is an artificial being created by operation of law, having the right of succession and the powers, attributes, and properties expressly authorized by law or incident to its existence. So, to explain it further, ang corporation ay isang operation of law, meaning di siya nabuo through agreement or stipulation of two parties. And another point, corporation has right of succession, meaning it continues to exist even if an individual owner dealt with withdrawal, death, insolvency, and incapacity. It will also be dissolved through operation of law. So basically, nag-start siya through operation of law and magdi-dissolve din through operation of law. Organization of a corporation. So the corporation has provision and first, at least 5 but not exceeding 15 natural persons. So yung natural persons na yun, dapat they're at their legal age and they are a resident of the Philippines. Next, article of incorporation. This represents as certificate and it has to be authorized by the Securities and Exchange Commission. Next, authorized capital stock. Itong authorized capital stock, ito yung parang maximum amount ng issue na kayang i-issue ng isang corporation or entity. So, any excess share issued is deemed illegal. Next, majority vote of the board plus a vote by shareholders representing at least 2/3 of the outstanding share capital. Last, at least 25% of the corporation's authorized capitalization must be subscribed and at least 25% of the total subscription must be paid upon subscription. The paid-up capital cannot be less than 5,000 pesos. Shareholders' equity. What do we mean by shareholders' equity? To explain it further, gamitin natin yung basic accounting equation na ALE. ALE, yun yung asset is equals to liability plus equity. Since sa shareholders' equity, equity yung nahanap natin, baliktarin natin siya. So, ang mangyayari, asset minus liability is equals to equity. So, meaning, para mahanap yung equity, kailangan i-deduct natin lahat ng liability dun sa asset. So, basically, ang equity ay ang residual interest. So, same lang siya sa owner's equity ng sole proprietorship. Transaction affecting corporation's equity. Authorization, subscription, issuance, acquisition, reissuance, and retirement of shares, origination of other equity instruments, dividends, transaction that giving rise to other component of equity, recapitalization and quasi or reorganization. So, lahat ng ito mapapag-aralan natin sa Shareholders' Equity Part 1 and Part 2. Let's now proceed to the share capital. Accounting for share capital. We have two methods for share capital. First is the memorandum method. Subsequent issuance of shares are credited to the share capital account. And next, journal entry method. Subsequent issuance of shares are credited to the unissued share capital. So, ang pinagkaiba lang nila ay yung credited na part. Memorandum method versus journal entry method. Let's have an illustration. Authorized capitalization. On January 1, 20X1, ABC Co. received authorization from the SEC to issue share capital of 1 million divided into 10,000 shares with par value per share of 100. So, sa memorandum method, memo entry lang na ang nakalagay, which is the authorized capitalization is 1 million divided into 10 shares with par value per share of 100. Lahat ng info nandyan. And sa journal entry method naman, debited ang unissued share capital of 1 million and credited ang authorized share capital of 1 million. So, let's have a definition. Authorized share capital, maximum number of shares fixed in the entity's authorized articles of incorporation. Unissued share capital, portion of authorized share capital not yet issued. For further explanation, we have here a drawing. So first, this is our authorized share capital. So for us to determine the unissued share capital, we have to determine first the share capital. Example, ito yung share capital natin. We notice na meron pa siyang excess, which is yung portion na pwede pang i-issue kasi hindi pa naman na-meet yung maximized authorized share capital. So ang tawag doon sa mga hindi pa na-issue ay unissued share capital. Another illustration, subscription. Of the total authorized share capital, 25% was subscribed at par value and 25% of the total subscription was paid at subscription date. So we have here again a drawing. So ito yung authorized share capital natin. 25% was subscribed. So ito yung 25%. Yan yung portion na 25%. And yung 25% of the total subscription was paid. So sa 25% na yun, so yung 25% ng 25% subscribe, ayun yung paid portion. Now, lagyan natin siya ng amount. Ang authorized share capital ay 1 million. And ang 25% ng 1 million is 250,000. Yun yung subscribe at par value. And yung 25% na paid, so sa 250,000, multiply natin yung 25% to determine the paid portion of subscribed share. And the amount is 62,500. Yan pa lang yung paid portion. So, ima-minus nga natin yung 250,000 sa 62,500. We will now have a 187,500 subscription receivable. So, lagyan ulit natin sa memorandum method and journal entry method. We notice na same lang sila ng journal entry. So, debit cash, 62,500, which is yun yung bayad na portion. Subscription receivable of 187,500, yun yung unpaid portion. In subscribed share capital of 250,000, yun yung subscribed share capital. So, definition ulit, subscription, contract between the purchaser of shares and the issuer in which the purchaser promises to buy shares of the issuing company's stock. Subscription receivable, presented as a deduction from the related subscribed share capital. At subscribed share capital, portion of the authorized share capital that is subscribed but not yet issued. Let's now proceed to the classes of share capital. Share capital has two classes. First, the ordinary share. It bears the ultimate risk of loss and it receives the benefits of success. While for the preference share, it gives the holders certain preference over the shareholders. For further explanation, in ordinary share, they have 4 basic rights. First, right to attend and vote in shareholders meeting. Next, right to purchase additional share, also known as preemptive right or stock right. Third, right to share in the corporate profits, also known as the right to dividends. And last, right to share in the net asset of the corporation upon liquidation. So for explanation, so for vote, more ordinary shares, more voting rights. Preemptive rights, it protects shareholders from involuntary dilution of their ownership interest. For the preference share, they have the priority claims over dividends and net of assets of the corporation in the event of liquidation. Preference share is prioritized. So parang ganito lang yan, ang example. Sa dividends, ima-minus na doon yung percentage ng preference share. Dividends minus yung amount ng preference share, yun na yung para sa mga ordinary share. So, parang sa preference share, parang fixed na siya. Tapos yung sa ordinary share, parang depende kung magkano yung dividends. Share premium. It is an additional paid in cash arising from, first, excess of subscription price over par value or stated value. Next, excess of reissuance price over cost of treasury share issued, distribution of small stock dividend. Next, par value and no par value share. Sa certificate, merong peso fixed value, ito ay par value share. If it has no peso fixed value, then it is a no par value share. Under the corporation code, ordinary shares may be issued as either par or no par values. However, preference shares should only be issued as par value shares.
Legal capital, the portion of contributed capital that cannot be distributed to the owner during the lifetime of the corporation unless the corporation is dissolved and all of its liabilities are settled first. Saka pa lang po nito may babalik yung capital mo. So, sa legal capital, ito yung puhunan mo na pinasok sa company pero hindi mo pwedeng bawiin anytime unless ma-dissolve lang yung company. So, hanggat buhay pa yung company mo, hanggat nandyan pa, nakatatag pa yung company, pasok pa rin yan. Nandyan lang ang legal capital mo. There are two ways computing legal capital. First, fair value shares. Second is no fair value shares. In fair value shares, the sum of shares issued and subscribed share. While in no fair value shares, the sum of shares issued plus subscribed share plus share premium. Here's an example. The equity section of ABC cost statement of financial position shows the following information. And the requirement is compute for the legal capital assuming A, the ordinary shares are fair value shares, and second is the ordinary shares are no fair value. So, makikita po natin dito sa next slide is yung pinagkaiba ng dalawa. Mas mataas ng 300,000 because kasama yung share premium. And take note, in case of no fair value share, legal capital includes share premium of ordinary share. Preference shares can only be issued as fair value shares. Thus, the share premium of preference shares is not included. Share issuance cost. Issuing shares entails expenditures such as regulatory fees, legal, accounting, and other professional fees, and many more. These expenditures, called share issuance costs, are deducted from any resulting share premium from the issuance. If the share premium is insufficient, the excess is charged to retained earnings. So here's an example. On January 1, 20X1, ABC Co. issued 1,000 shares with par value of 100 for 120 per share. Share issuance cost amounted to 5,000. So, here's the journal entry for that. Debit cash of 120,000 and credit of share capital 100,000 and share premium 20,000. So, another entry for this is share premium 5,000 kasi yung share premium babawasan lang natin for the share issuance cost na 20,000 ibabawas natin dun sa 20,000 yung issuance cost dun sa share premium. Babawasan natin siya ng 5,000. So, ang credit nun ay cash 5,000 pesos. So, what if share issued at a discount? Shares cannot be issued for a consideration below fair value or stated value. Any deficiency in the consideration received is a discount. The discount is often termed as the discount liability of the shareholders. So, yung shareholders concerned must be held liable to the corporation, otherwise, the issuance is deemed illegal. So, here's an example. An entity issued 1,000 shares with par value share of 100 for 80,000 per share. Yung journal entry natin for that is debit cash 80,000 pesos, discount on share capital 20,000 pesos, and credit for share capital of 100,000 pesos. Note that the discount on share capital is a receivable from the shareholders concerned but presented in the financial statement as contra equity account. It is deducted from shareholders' equity. Issuing shares below par or stated value is prohibited only on original issuance. Thus, treasury shares may be reissued below par or stated value. Yung treasury shares lang ang pwedeng i-reissued below par or stated value. So there are non-cash consideration in issuing stocks. So first is watered stock and second is secret reserve. Watered stock muna tayo. Watered stock, share issued for non-cash consideration with fair value that is below par or stated value. Difference between the fair value of non-cash consideration received and the par or stated value of the shares issued. So, for example, bumili ka ng land pero ang pinambayad mo doon is shares. Yung price ng land mo is below par or stated value. It is called watered stock. For example, here, ang journal entry natin is land worth of 80,000 pesos is in debit. Next, discount on share capital, 20,000 pesos. And the credit is share capital yung par value mo, which is 100,000 pesos. We discussed earlier that water stock is in discount. So what if it is premium? It is premium and then it calls secret reserve. Arises when shares are issued for non-cash consideration with fair value that is above par or stated value. The secret reserve is the opposite of watered reserve. Treasury shares, also called as treasury stocks, are an entity-owned shares that were previously issued but are subsequently reacquired but not retired. Accounting for treasury shares. Accounting for treasury shares are accounted for the cost method. The reacquisition and subsequent reissuance of treasury shares are recorded at cost. Deduction to the total shareholder equity. It is contra equity account. As we can see, the equity section of ABC's statement of financial position as of January 1, 20X1 is as follows. On July 1, 20X1, ABC reacquires 1,000 shares at 90,000 pesos. Treasury shares debit 90,000 and cash 90,000 pesos. Another is retained earnings. 90,000 unrestricted and retained earnings for credit is appropriated 90,000. Here's the reissuance cost. On September 1, 20X1, ABC reissues 1,000 treasury shares at 90 pesos. Our journal entry for that is cash 90,000 pesos debit and credit is treasury shares. Another entry for that is retained earnings appropriated 90,000 pesos in debit while in credit retained earnings unrestricted 90,000 pesos. So what if mas mataas yung reissuance mo kaysa sa cost mo? So here's an example. On September 1, 20X1, ABC reissues 1,000 treasury shares at 140. So here's the journal entry for that. On the debit, cash 140,000 pesos. And in the credit, treasury shares worth of 90,000 pesos and share premium treasury shares 50,000 pesos. So another entry for that is debit, retained earnings and appropriated 90,000 pesos and credit, retained earnings unrestricted 90,000 pesos. What if it is less? On September 1, 20X1, ABC reissues 1,000 treasury shares at 60 pesos. Here's the thing. If you have balance in share premium treasury shares, ayun una mong i-record, ayun muna. Pero dito sa example natin is wala pa siyang balance sa share premium ng treasury shares. So, magde-debit siya ng retained earnings 30,000 pesos. Then, credit, treasury shares, 90,000 pesos. Another entry for that is retained earnings appropriated 90,000 pesos and retained earnings unrestricted 90,000 pesos. Retirement of shares. Shares are considered retired if they have been reacquired and cancelled in accordance with SEC regulations. Retired shares cannot be reissued anymore. When shares are retired, the total par value and related share premium of the retired shares are derecognized. If the par value and the related share premium of the retired shares exceed the retirement cost, the difference is credited to share premium retirement. If the par value and the related share premium of the retired shares are less than the retirement cost, the difference is debited to the following in order of priority. First, share premium treasury shares, and next is retained earnings. So here's an example. Retirement of shares. The equity section of ABC's statement of financial position as of January 1, 20X1 is as follows. Here, case 1. Retirement cost less than original price issue. ABC reacquires 1,000 shares at 80 per share on July 1, 20X1 and retires them on September 1, 20X1. In July 1, reacquisition. Ang journal entry natin for that is treasury shares debited by 80,000 pesos and credited cash 80,000 pesos. Here's the thing. Sa September 1, retirement, Ang journal entry natin for that is debit, share capital which is 100,000 pesos. Share premium, original issuance 20,000 pesos. Treasury shares, credit 80,000 pesos. And share premium retirement 40,000 pesos. Sa case 2, retirement cost greater than original price issued. ABC reacquires 1,000 shares at 140 on July 1, 20x1 and immediately retires them. So, same nung, nung case number 1 natin. So, ang journal entry natin for that is share capital which is 100,000 pesos, share premium, original issuance 20,000 pesos, and ito na po, dito na po tayo yung priority. In a share premium treasury shares, 5,000 na lang yung natitira. So, 5,000 lang yung idadagdag. The next is retained earnings. Pambalance natin sa 20,000 na kulang. And for the last is cash, 140,000 pesos credited. So, di ba sabi natin kanina na accounting for treasury shares is held by cost method. So, here's another way of computing treasury shares, which is par value method. Par value method is not acceptable in financial reporting, and the acquired treasury shares are accounted for as if they are retired.
Delinquent subscription. Una-identify muna natin anong delinquent. In finance, it refers to a situation where a borrower is late or overdue on a payment. Mako-consider natin na delinquent kapag si borrower ay hindi pa rin nakakabayad ng lagpas na ng at least 30 days mula sa due date. Under the Corporation Code, a subscriber is declared delinquent if his share subscription remains unpaid at due date. The delinquent shares are sold at a public auction to the highest bidder. The highest bidder is the person who is willing to pay the offer price for the smallest number of shares. When we talk about offer price, for a particular stock or share, it is the price that the person selling it says that they want for it. Kasama na sa offer price yung unpaid balance on the subscription, interest accrued on the subscription, and yung mga expenses sa public auction. Kung walang bidders, the corporation may bid if it has sufficient retained earnings. Yung subscription nun is magiging fully paid na and all the shares will be held as treasury shares. Kung wala namang bidders and the corporation is precluded from bidding, halimbawa na lang is hindi sapat yung retained earnings, the subscription is cancelled in its entirety and the costs of the public auction are recognized as expenses in accordance with PAS 32.37. Sale of different classes of share capital. Kapag nag-issue ang entity ng dalawa o higit pa na klase ng shares, halimbawa ay ordinary shares at preferences shares, at a lump sum price o isang bayaran lang at hindi installment, i-allocate yung price nun sa kung anong klase ng shares ba yun base sa relative fair values nila. Ang tawag doon ay proportional method. Kung yung isang class of shares lang yung may determinable fair value, yung class na yun is assigned sa fair value nun, tapos yung matitira sa lump sum price is i-allocate na lang doon sa isa pang tawag na class. Ang tawag doon ay incremental method. Equity instrument versus financial liability. Financial liability. Since liability nga siya, kumbaga may obligation. Ang i-highlight lang natin na phrase dito ay the entity has the contractual obligation to pay. Cash man yan o another financial asset or to exchange financial instrument. But take note to the word contractual. Halimbawa ng financial liabilities ay payables such as accounts, notes, loans, bonds payables, kasama na rin yung lease liabilities, redeemable preference shares issued, and etc. Hindi kasama yung mga SSS, PhilHealth, Pag-ibig payables, taxes, as well as yung constructive obligation kasi hindi naman sila nag-arise from contracts. Sa kabilang banda, the equity instrument has no obligation to pay. Kasi ang equity instrument is any contract that evidences a residual interest in the assets of an entity after deducting all of its liabilities. Redeemable and callable preference shares. Essential feature daw ng equity instrument ay ang absence of contractual obligation to pay. Kahit pa yung holder ng instrument ay may karapatan sa pro rata shared in dividends, na pag sinabi nating pro rata, ang ibig sabihin ay proportion. Legal form is also irrelevant when determining if a financial instrument is a financial liability or an equity instrument. Minsan kasi yung instruments nasa form of shares of stocks, pero yung issuer kinaklasify them as financial liabilities kung na-meet naman nila yung definition of a financial liability. Differences ng redeemable at callable preference shares. Sa redeemable, holder has the right to redeem at a set date. It is also classified as financial liability. Why? Kapag kasi si holder ginamit niya na yung right niya to redeem, yung issuer is mandatorily obligated o obligado talaga bayaran yung redemption price. Yung related dividends naman sa redeemable preference shares are recognized as interest expense in profit or loss. Sa kabilang banda, sa callable preference shares naman, the issuer has the right to call at a set date and it is classified as equity instrument. Why? Yung karapatan to call is yung kumbaga power of freedom ni issuer to decide. Therefore, there is no obligation to pay unless it chooses to call on the shares. Yung related dividends naman sa callable preference shares are recognized as direct deduction from retained earnings. Callable preference shares are accounted for similar to regular preference shares. On redemption, the accounting is similar to the retirement of shares. Illustration: ABC Company issued 1,000 callable preference shares with par value of 100 for 120 per share. Sa debit side, ang entry ay cash na 1,000 multiplied by 120, it is equal to 120,000. Sa credit side naman ay preference share capital na 1,000 multiplied by 100, that will give us 100,000. At isa pa ay share premium preference shares na 20,000. Case 1, kapag redemption at less than the original issue price, yung 120 per share ay magiging 90 per share. Ang entry sa debit side ay preference share capital na 1,000 multiplied by 100, it is equal to 100,000. Share premium preference shares, that will give us 20,000. Sa credit side naman ay cash, 1,000 multiplied by 90, that will give us 90,000. And share premium redemption, that will give us 30,000. Case 2, redemption at more than the original issue price. Yung 120 per share ay magiging 130 per share naman. Ang entry sa debit side ay preference share capital 1,000 multiplied by 100, that will give us 100,000. Share premium preference shares na magiging 20,000. Retained earnings na 10,000. Sa credit side naman is yung cash na 1,000 multiplied by 130, that will give us 130,000. Origination of other equity instruments. Pwede kasing mag-issue ang corporation ng ibang equity instrument, hindi lang share of stocks. Example ay stock rights, conversion option included in convertible bonds and convertible preference shares, detachable warrants issued with bonds and preference shares, and stock options. Stock rights are issued to existing ordinary shareholders in relation to their preemptive rights. Preemptive rights is a right of existing shareholders in a corporation to purchase newly issued stock before it is offered to other investors. Kumbaga, sila yung mauuna alokin. Sila yung priority. Stock rights offer protection from dilution of ownership. Kapag kasi ang company nag-issue ng new shares sa investors, lalong liliit yung percentage of ownership ng mga existing shareholders kung marami na sila. Nababawasan yung ownership. Yun yung sinasabing dilution of ownership. The exercise price of the stock rights is usually lower than the market value of the shares, and stock rights are evidenced by share warrants. Ano nga bang share warrants? Ang share warrants ay certificate na magbibigay ng right kay holder na mag-acquire ng shares sa mapag-uusapang price. Share warrants are issued in conjunction with the following: A. Issuance of stock rights in relation to shareholders' right of preemption. B. Issuance of retouchable warrants with other securities as sweetener or equity kicker to make the principal instrument more attractive to investors. And C. Issuance of share options to employees as additional compensation. Share warrants are exercisable only within a definite of time and shall expire thereafter. Share warrants issued for stock rights normally have shorter duration compared to share warrants issued with other securities. Accounting for stock rights. It is recorded through memo only or memorandum method na pa-sentence because yung stock rights ay ini-issue lang naman sa existing shareholders for free. Magkakaroon lang ng entry kapag yung rights are exercised or recalled. Kapag nag-recall, ang entry ide-debit yung consideration na binayaran sa recall sa account na share premium. Kapag naman na-expire yung stock rights ng walang naganap na recall, walang magiging entry. Illustration: ABC Company issues 10,000 stock rights to its shareholders. Each stock right entitles the holder to purchase one ordinary share of ABC Company for 120. The par value per share is 100 and the fair value per share is 150. Yung memo entry nito is the issued 10,000 stock rights to shareholders, enabling them to purchase 10,000 ordinary shares with par value of 100 for a subscription price of 120 per share. Kapag na-exercise yung half of the stock rights, ang entry ay debit cash na 10,000 multiplied by 1 half multiplied by 120, that will give us 600,000. Sa credit side naman ay ordinary share capital na 10,000 multiplied by 1 half multiplied by 100, that will give us 500,000. And yung matitirang 100,000 is in share premium ordinary share. Scenario 1, na recall na yung the other half at 1 per stock right. Ang entry ay debit share premium ordinary share na 5,000 and sa credit side naman is cash 10,000 multiplied by 1 half multiplied by 1, that will give us 5,000 also. Scenario 2, the other half expires without recall. Only memo entry at walang magiging journal entry. Convertible bonds and convertible preference shares. Para mas maging saleable or marketable, binebenta nila minsan yung bonds and preference shares na pwede itong i-convert into ordinary shares. Kapag nag-issue ng convertible bonds, ang magiging epekto nito is naging dalawa yung in-issue na instrument ng entity. Una, financial liability para dun sa bond, and pangalawa naman is yung equity instrument for the conversion feature kapag na-convert na ito. Kapag naman convertible preference shares ang in-issue, the entity has issued only one type of instrument, an equity instrument but of different classes. Isang instrument lang pero iba-iba naman ng klase. Bonds with detachable warrants. Kung nakalimutan nyo ng pinag-aralan sa Chapter 3, detachable share warrants can be detached or separated from the bond and traded as a separate security. Sa accounting, pareho lang ito sa convertible bonds na financial liability ang bonds at equity instrument naman yung detachable warrants. Preference shares with detachable warrants. Ito naman similar sa convertible preference shares. Magre-resort lang ng one type of instrument, an equity instrument but of different classes. However, the detachable warrant is not embedded derivative but rather a standalone instrument which should be accounted for separately. Pag sinabing standalone, mag-ooperate independently. Detachable warrants are standalone instrument because they can be transferred or sold separately. The issue price of convertible preference shares ay ina-allocate sa preference shares at detachable warrants base sa relative fair value ng issuance date nito. Kung wala namang available fair value pareho, yung allocation of the issue price ay base sa intrinsic value. Ito yung difference ng fair value ng ordinary shares and yung subscription price. Donated capital. Ito yung mga asset na binibigay sa isang entity bilang regalo from non-reciprocal or one-way transactions such as, una, donations from shareholders na kinikredit natin sa share premium. Pangalawa, donations from the government na re-recognize naman natin as government grants. At yung pangatlo, donated from other sources na re-recognize natin as income when the condition attached to the donation are fulfilled or are reasonably expected to be fulfilled. The donation becomes receivable, and yung last is yung criteria for asset recognition are met. Yung donation from shareholders ay pwedeng magmula sa iba't ibang form. It's either cash, na minimeasure natin sa kung magkano yung amount ng marireceive or na-receive na cash. Pangalawa, pwede naman itong maging non-cash asset na minimeasure natin sa fair value nito. At yung pangatlo, pwede itong maging entity's own shares na initially recorded through memo entry. Donated capital is recognized only when the donated shares are subsequently reissued. Kasi wala namang ma-generate na asset galing sa donated shares hanggang ma-reissued yun subsequently. If the donated shares are not to be resold, the entity should effect a formal reduction of its authorized capital by retarding the shares received. Assessment on shareholders. Yung mga shareholders of corporation na malaki na ang financial problem, pwede silang bumoto para magdagdag ng additional capital. Yung madadagdag na capital ay kikredit sa share premium. If an equity transaction results to, una, excess credit. Kapag nag-excess credit, yung excess credit is credited to share premium. Halimbawa nito is yung issuance or subscription of shares at more than par or stated value, the issuance of treasury shares at more than cost, retirement of shares at less than original issuance price, and etc. Kapag naman yung equity transaction results to excess debit, the excess debit is debited to share premium and retained earnings kung yung share premium is insufficient. Halimbawa nito is yung share or stock issuance cost, issuance of treasury shares at less than cost, retirement of shares at more than original issuance price, and etc.